Hello traders, and welcome back to your boot camp. It is currently day number 13. We're getting into my favorite part. The next 3 days are really my favorites because these are the tools that you're about to learn with targeting, with getting risk-free, with the golden zone and the extension dip are really the tools that make me a successful trader, and hopefully I can shed some light on the traits of the trades that we're taking. As usual, as these get more advanced, they are as I like to say, as pinpointed as possible. So today we're only going to discuss the golden zone trade. It's a very simple concept. All it is confluence of trade, but if done correctly, you can find yourself in some very profitable opportunities very quickly. So the golden zone trade. First of all, the golden zone is just a name. It's just something I named it. You can name it whatever you like, but the golden zone trade is how I refer to this trade. And really, the definition of it is it's the area where the 50% or the 61.8% retracement is closest to the 100% extension. So we've mentioned this word, and we've talked about this word confluence so much. And we talk about building that case for entry and building that list of why you should enter and things of that nature. Well, same thing goes as follows here. The golden zone trade is essentially the same thing. All it is a good confluence area. The golden zone trade provides the highest probability of rejection. Now, don't get me wrong, having a 100 level sequence rejection is great. But when you can mix and match not only extensions but retracements, your trend trading plan will be that much more successful. And it's essential, and it's basically the most essential confluence zone to trade off of. And so make every trade a golden zone if possible. And so just to kind of get us started, I want to show you what a golden zone looks like. So a golden zone is very simple. If we were to take a retracement of this low to this high, we would get a retracement in this area, 50% or so, 61.8 down here. And then if we were to take this high as origin, this is 1, this is 2, and get a 100 level, they may meet up in the same area. This is what we call a golden zone opportunity or a golden zone trade. And so what we're trying to do is we're not only taking a chart where we have a high probability chance of the market having a successful 50% rejection from this retracement, but we're also taking the idea that we're having a full extension as well. The market in approximately the same zone is lying on top of each other, and we're having more than one rejection reason. You want your reasoning for rejection to be done well. And so in a bullish market, what you're doing is you're taking, in this case over here, this is a bull market or an upward, and this is a bear market. Okay. In this case, you're taking your Fibonacci retracement from your low to your high. And in this case, you're taking it from your high to your low. Okay. Then what you do is it'll spit out your numbers, your 50%, your 61.8, the stuff we've already talked about, and that was the goal with those beginning videos, so that you didn't have to learn the tool and then learn the concept. But then once it spits out your numbers, once you've drawn that, you're then going to rock your extension, origin to 1, 1 to 2, 2 to 3. In this case, in the downward area, because you're pulling back in. So your bullish market's pulling back. Your bearish market's rejecting back up. Okay, and the golden zone trade is just that area where both of them meet. Once again, super easy video today in the golden zone. So what this looks like is pretty simple. We have a market. Here's our low. Here's our high. As everybody can see, this is heading in the upward direction. This is a bullish market. All right. What I've then done is the first thing I did was I found my low, I found my high, and I drew, as you can see, from the low to the high. That is my retracement. What I notice is that I have a 50% retracement here. I have a 61.8% here. I have a 38.2 here, 23.6 here. Okay. Then what I did is I found my origin. I found point 1. I found point 2. When I drew that out, it's very tough to see in this picture. And from what I know, I can zoom in a little bit here. You see right here what we have is Oops, I have to zoom in one more time. What we have is a 100 level here on the bottom and a 50 level on top, but you see they're right together. The odds of rejecting here are much higher, the odds of having a strong rejection. What your goal is to set a pending order in this zone, and when it hits it, it rejects much quicker. You have much less, chance of drawdown and much less of the market teetering around your level. Hits it with authority. And so combining this, now back out a little bit, combining this with support resistance and these levels we've been talking about, and then also combining it with volume analysis, where we're taking a look at the brokers. When you combine these things together, what it does for you is gives you a solid area for entry. Now, when you have a golden zone, there's a preference that'll happen. Sometimes you'll have the 100 level that'll lie between the 50 and 61.8. Sometimes they'll stack on top of each other. Both trades are equally important and they're just fine. But what you guys need to understand is that the location is important as well. Our entry is off the 100 level, correct? Yeah. But if you had the 100 level above the 50%, it's up to you if you want to be more conservative. If you have the 100 level, say the 100 level's here and our 50 is where it's at. If your 100 level's above our 50%, you might run into a situation where you want to actually put the pending at the 50%. Now, once again, all we're doing in the boot camp is showing you the information of what we've done to learn how to trade. And so it's important that you can work around this and create your own trading plan. And so depending on if you're aggressive or conservative, you're going to take the higher number. What I mean by that, you're always going to be around a 50 or 61.8 with the 100 level. If you want to be a more aggressive trader, you will take whatever's highest, the 100 level or the 50. If you want to be a more conservative trader, you will take whatever lower, the 100 level or the 50, or in some cases the 61.8 if it's down below these levels. And so I just want to clear that up, because it's not about, what should I do? It's about your trading plan. This is the area you should be looking to enter a trade off of. This is the golden zone. And the reason it's called the golden zone is that we've had massive success with rejections off of this area. And so what you're trying to do is find out what you're looking for. So if I go over to the charts here and I take a look at this recent trade we've been talking about so much. Here's an example of what you can look for. Here's an origin to 1, here's a 1 to 2. Okay? From recent peaks, we can then grab our retracement and look at what we have. We have a 50%. Okay, we have a 50% here, 100 level here. This area is a heavily occupied area for potential rejection. And so what you want to do is focus on what you're, finding these chances. Because in this zone overall is a rejection, but when you see the 50% and the 61.8, these are where the rejections will happen, these little black boxes. Okay, this is standard confluence trading. It's nothing secret. Everybody knows that they can do this, but people struggle because they can't seem to find, if they should do it, or they basically are second guessing themselves. And so the goal with this is to find yourself in an area where you have these two together. The confluence is heavier, and once again, you have entered the golden zone. You've entered the golden zone. So the golden zone is very important, and the golden zone is one of those things where if you learn it, it's going to help you on your entry side of things. So after entering, we're going to talk about getting risk-free in the next video, as well as start learning about targeting and internal versus external. But once again, keep practicing. Go out there and find the golden zone opportunities. Practice these. These are important. Without these, you're not going to have the success that you'd like. once again, as we talked about entering the second week, there was a couple things to success. Number one was starting. Number two is start doing. You've started. You're listening to these videos. It's time to start doing. Go out and mark the charts. Go out and practice for yourself. Because I can sit here and show you different scenarios and different viewpoints all day long. But without you guys actually going out and practicing and showing us that you're learning the concepts and that you're getting it, you won't ever succeed. And without practicing and trial and error, you're not going to have the level of success that you'd hope. So once again, I encourage you guys to do that, and I will see you guys back in tomorrow's video for the next bootcamp video.